All right, if we look back at the realized vol, what we saw last week, it was pretty stable in the low 30s for Bitcoin, whilst ETH continues to out-realize, having wilder swings. That's still hanging around near 40 realized. What does that mean? 40 realized, it comes to about just over 2% per day on average in terms of how much ETH is moving. Implied vols had their customary drop into the weekend. So you see that drop there. You see that drop there in Ethereum. They have come bouncing out of the weekend though and recovered somewhat to the point where implied vols have converged with realized on Bitcoin, which is why we've got zero carry, whereas implied vols in ETH have not managed to bounce up towards realized because realized has been quite good actually. So we've got quite a decent negative carry at close to 10 vol negative on ETH because the oversupplied gamma that keeps a lid on implied vol is actually performing quite well. And those who are willing to trade that gamma and pay the decay and try to capture those moves have been getting rewarded for it in the last 10 days or so because it's realizing about 40 vol. Already said what was said about the US CPI, so nothing to add on that point. Okay, jumping over to the term structure. So you can see BTC term structure continuing to come under pressure from the middle part of the curve. So you see the shift really happening in the middle. This area here between November expiry and March next year, losing sort of 1.5 to 3 vol points. Okay, that's where the selling flows are taking place, particularly in the November and December buckets. Now the June 24 and the September 24, these are relatively unscathed. Okay, so they're not coming down as much in vol terms. So you see this area holding, front end holding because the gamma's been okay, but the middle part of the curve is the thing that's stretching lower basically. ETH term structure, similar sort of story. I mean, we are seeing long end coming down everywhere. We are seeing a bit more pressure in the long end of ETH, like the June and Sep next year buckets as well. But again, gamma holding, as we said, a 30 vol gamma when it's realizing 40 doesn't make a lot of sense for people to sell that. But anything in November onwards is where the pressure is coming from. We did see a lot of call selling come back from overwriters this week, and that's really taking that middle part of the curve down by similar 2 to 3 vol points. Okay, so those are your term structure moves. If we now look on at the relative value spread, not a huge movement in the relative value spread, pretty stable this week, I would say. We've seen this downward slope where we're close to 0 in the front and we go to -5 in the back. As ETH gamma, even as ETH gamma is working really well and realizing 8 to 9 vols over Bitcoin on a 10-day, and on a 30-day, it's about 4 to 5 vols over. The front end gamma spread can only get to 0. It can't go positive. So that is telling a lot, right? That's telling you that even with Ethereum realized vols persistently higher for the last few weeks, the best that this spread can get to is flat, right? Which that just is a clear indication that the supply and demand dynamics are in the driving seat. They don't care as much what realized is doing. It's the supply and demand that is dictating where this spread is going, right? So for those of you who see realized vol continuing the way it is, then ETH gamma is amazing value right now, okay? Because these option sellers are clearly not that price sensitive. They're not looking at the realized and the implied and saying, oh, it's not worth selling this optionality because it's actually working really well from the long side. They're just saying, if I can collect premium, I'm going to sell the calls. I'm going to sell them every week. I don't care, basically, right? And that's pushing down the vols to levels that don't really make a ton of sense if you're a vol player. And it's a little bit of a gift. If you're a market maker, you're getting given this vol at 30 and you can make 40 out of it from the realized, you're actually quite happy right now. Yeah. Now, that's not to say things can't die down and then it just stops moving and realizes 15 again, and then you're going to be choking on theta again. That can definitely happen. But right now, the market makers are making hay while the sun shines in terms of that realized. Okay. And then finally talk about SKEW in terms of the kind of the vol stuff. You know, we saw another failed attempt at 28.5K on Bitcoin, and that has moved put premium back across the curve. If we all maturities out to 3 months have flipped back towards put premium. So again, very skittish. This SKEW is so volatile and just kind of is tracking what spot does. The long end is obviously still firmly in calls. So we're looking at about 3.5 vol premium on calls for 6 month stuff. and better than that if you go further out the curve. We're talking above 5 vol premium. But that short end, anything 3 months and shorter, is now input premium on Bitcoin, a couple of vols. And then if we look at the Ethereum skew, the call bid that we started to see last week that we thought might be a more meaningful shift has completely reversed the other way again. Okay, so it couldn't hold. The call sellers came in, the put skew came flying back with a vengeance, and the curve out to 3 months is deeply input premium again, way deeper than Bitcoin. You can see that on these charts here, where we've got the yellow line is the ETH skew, and then the green line is the Bitcoin skew. So you've got a small put premium on Bitcoin, you've got a massive one on Ethereum, you've got a flat on the 3 month, you're flat pretty much on Bitcoin skew, or you've got a 4 vol put premium on the 3 month on Ethereum. So a big spread coming back between Ethereum skew and Bitcoin skew, which is the options market way of saying, watch out, Ethereum, if it breaks 1550 on the downside, we could have a pretty fast 10% puke in this thing. That's kind of what I'm reading from these quite extreme moves back into put premium. All right. And then the last thing I would say, another thing that's driving that, obviously, like I said, the volatility of the skew is driven by a lot of speculation where people start chasing the directional moves. But the ETH Bitcoin cross has broken below quite an important technical support area, and that in itself is fueling some of this fear that Ethereum could break down, which is why you would want to pay a little bit of a premium. You'd be willing to pay a premium for Ethereum downside relatively. Okay, so that's what we're seeing there. All right, if we jump over to the flows, volumes are down. So we've got about a 15% decrease in Bitcoin volumes as spot kind of remains stuck in the range. Generally, we're seeing volumes explode when markets are ripping higher, right? Because it brings call buying activity and it brings more stuff like that. The large overwriter, what have they been doing? They've rolled their short October 29s, which you can see is the orange. It's this big orange bar here, rolling those into December 30K calls. So that's just, rolling short calls to get more premium out of them, basically, right? So that was a big clip that traded this week. We also saw a big 21K puts being sold in December. That was actually a delta hedged position. So that was more of a downside skew trade. We saw a directional trade in the form of the 31-37K call spreads in December in decent size. And then we got this 3-legged trade here, which was a December 23, 27, 31 call fly that was bought. So someone trying to play the idea that we're going to be just stuck around that 27 area between here and year end. Okay. And then you see a bit of put spread activity here in the absolute front end of the curve, looking at 13th of October expiry out to 27th of October expiry. So short dated puts and put spreads, but then all the long dated activity kind of in the call area, with quite a lot of Vega supply being generated from the butterfly trade and the rolling of those big call overwrites. Okay, that's what we're seeing in Bitcoin this week. In terms of Ethereum flows, we're seeing a similar story, volumes down actually more like 30%, because we had seen a big spike on that move up in Ethereum that got people excited. So that's died back down as we lost upside momentum. The biggest clip was these November shorts. So November 17 and 1750 calls, getting sold in a decent clip, like 60,000 options. Also, we, as they pushed down that vol, we did see some buying of the calendar. So October, November call calendar being bought on the 1700 line. We saw December 1700 calls being sold versus a lot of high strikes being bought. So this area here, the kind of 19 to 2200 area in December getting bought, 1700 getting sold, and then some puts getting sold as funding legs. So we saw bullish risk reversals being traded. So we've got 1400, 1300, 1200 puts all in December. A lot of those getting sold in favor of buying the upside, because obviously that skew has now got quite expensive for those puts. All right, that's kind of the main flows that we've been seeing in Ethereum. So if we look at the gamma positioning, we're starting to see a bit of divergence again. So you see Bitcoin under zero. We've got Ethereum over zero. So they were trading a bit pretty neutral last week. So we started seeing that drift. So Bitcoin dealers are short gamma here. They will get shorter on the upside if we were to rally above 30K. So that we do think that position will increase, given that all the upside calls that people have bought in those strikes. If we look at the Ethereum profile, it doesn't really look the same. We've got this massive long strike at 1700 in October. We've also got the same thing in November, and we've got some longs above that as well from these big call sales that we've been seeing, right? So Ethereum gamma is long here, and it will get longer on the upside, whereas Bitcoin is short here, will get shorter on the upside. So that divergence in the gamma positioning will increase if markets trade higher. So we believe that in a bullish move for crypto, Ethereum's really going to struggle because of all that sticky gamma positioning. So therefore, you are likely to see more outperformance of Bitcoin on the upside, which is what we've seen all year. Bitcoin's up like over 60%, Ethereum's like 30 something. So that outperformance we think continues if crypto markets rally. And actually, even on the downside, just from a technical perspective, we think Ethereum's gonna, if it breaks 1550, it goes down pretty quick, and Bitcoin doesn't necessarily need to panic until it breaks 25. So actually, in either direction, there's a very high probability that Bitcoin outperforms Ethereum, I would say. Okay, but the option positioning will really help that happen on the upside from what we're seeing in the gamma divergence. Okay. That's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.